Good afternoon, YouTubers. Benjamin Youngman here. Done a few videos today, 8th of November, just getting a few out while I've got some time. Today's video is not financial advice. This video is for entertainment value only. Before making any financial decisions, seek qualified financial advice from a licensed planner or advisor. Make decisions based on your own financial objectives and goals. Do not go and pick a stock or buy a stock or make an investment because I talk about it. I'm not a qualified advisor. This video is just entertainment value where I talk about stocks and I offer my opinion. What you do with it is up to you. I do not make any recommendations on this video. Moving forward quickly, I just wanted to do a video on AfterPay, an Australian company called AfterPay Touch. Ticker code APT, ranked 73 on the ASX with a market cap of $6.6 billion. Now, Afterpay, a little bit earlier this year, actually had a market cap of $9 billion and was getting very close to being in the ASX top 50 companies. Now, this company has not yet produced a single dollar of net profit, okay? They haven't produced a single dollar of profits. Their total income for financial year 2018 was 142 million. And then 264 million in the previous financial year just passed, representing a 91% increase. So that's quite impressive. The company is growing very well so far as revenue growth. Their EBITDA, okay, their earnings before interest, tax, depreciation, amortization, were only 28.7 million in 2019, and was 35 million the prior year. So 35 million in financial year 2018 down to 28 million. So their EBITDA is a lot less, even though their revenue was a lot more. And that obviously shows that they're spending an absolute fortune trying to grow their awareness and their marketing strategy overseas. Their loss for the period was $43.8 million. Their loss for the last year before that was only $9 million. So their losses, as Afterpay grows, and their income grows, their losses are actually getting out of control. Now, I'm hard-pressed to find a fund manager that is saying that Afterpay Touch is not a great buying opportunity. These guys have degrees or several degrees, some of them, in economics and financial planning, and are a lot smarter than what I am. And they're all saying to buy this stock. It went from its listing price of $2.95 just under 2.5 years ago, all the way up to $36.57 in September this year, and now it's dropped back from $36.57 to $26.97 today as I sit here on the 8th of November. Like I said, market cap of $6.6 billion. They have approximately 252 million shares issued, and they are not yet profitable. Now, I have a bit of a contrarian view with Afterpay. I think that Afterpay Touch, as wonderful as everybody might say it is, I think it's the single biggest bubble currently on the Australian Securities Exchange. It's way overpurchased, overbought. It's way overvalued. And if I had $6.63 billion to spend today on one company or multiple companies, and somebody said to me, would you buy Afterpay Touch from us at that price? It doesn't make any money yet, but it's got great potential. I would say negative. No, not interested. It's way overvalued. Now, I'll get if I had a lot of views, I'd get a lot of negative feedback about this. I guess that's one advantage of not having a ton of subscribers or viewers and not pumping my channel out there in social media too much, keeping it very discreet and low profile, is I won't get as many negative reviews. But this is a market darling. People love this stock. I've been following Afterpay, by the way, since around $4.50, $4.60, and I thought it was expensive then, a couple of years ago. And I've been following it ever since. I liked the idea of the company. I thought it was different. I think it could be a great company, but it's run up too hard, too fast, too much. And it's just not worth over $6.5 billion. It just isn't. I don't care what any fund manager says. I'm willing to challenge that idea. Could you get in today and make a lot of money on it? Absolutely. You can make money in pretty much every bubble since the beginning of time. If you invested heavily in internet companies in the late 90s, you could have become very, very rich prior to the bubble bursting in 2000 to 2002. So you can make a ton of money in every bubble. I'm not saying you can't, but it just proves even more so that it is in fact a bubble. It's run way too high. It's $26.97 for one share. The market cap is way too high. This company, if I'm being generous, it's maybe worth $500 million. If I'm being extremely crazy, $1 billion, which gives it a stock price of about $4. This company is worth what it was worth about when it listed, $2.95. That's all it's worth. Even though it's had significant growth, because it's also had significant losses to counter that. So the more it grows, the more it loses, until such a time where it starts maturing and becoming a profitable company. So anyone caught up in the Afterpay bubble, pick your exit strategy well, have one planned, because if you don't and you think this is a long-term buy and hold for the next 10 years, you're gonna experience a lot more pain at some point in time if you don't take some capital off the table. Again, this is my personal opinion. I may be dead wrong. Afterpay, APT, biggest bubble on the Australian Stock Exchange. Walk lightly and carry a big stick. Be very careful, and get out when you can, if you can, and take some capital off the table if you've done well out of it. If you want to buy it where it sits today at today's price, God bless and good luck. I won't be going near it until the company is at least profitable and has a massive, massive correction. That might be in 6 months. It might be in 3 years. But it will happen. And when it does, I don't want to be in the bubble. I just don't. There's other companies that are growing more consistently and more fairly that I would rather put my money in. I don't treat the stock market like a gambling conduit. I treat it with a bit more respect than that. Some of the companies I invest in do explode and go really well very quickly, and that's a little bit scary for me as well. So I'm very cautious. But you can make a lot more money by consistent long-term growers that pay dividends and reinvest those dividends and so on, and have a proven history of being structurally sound. Okay, I think I've said enough. Video is almost 8 minutes in now. My opinion, Afterpay is a bubble. Be very careful. If you're making money on it, and if you have, great. Capitalize where you can, and watch your back with this one. Good luck. Happy investing. I have no interest in Afterpay. If you do, all the best. Thanks for watching. Bye.